Hello, one and all. So it's me, Mukund Sriram. So today we'll be going to the second session of third module, that is preparation of final accounts. Okay. We are moving through the process of accounting, starting from collecting evidence, creating journal, transferring the journal entries to the ledger. Then after preparing the ledger, you will be preparing trial balance, and after that, the last stage, you will be preparing final accounts. Fine. So let's move into the video. Yes. So what do you mean by final accounts? The term final accounts means you have to remember three things: trading and profit and loss account and balance sheet. Okay. So trading account, profit and loss account, and balance sheet. Fine. So these are the three accounts which constitutes to call as final accounts. Fine. So first one is trading account. What is trading account? First of all, what is the objective of our business? To make profit, right? So the main aim of trading account is to ascertain the gross profit of the business. Gross profit means whether purchasing of goods and selling of goods has proved to be profitable or not. Okay. So basically, if you need to find out the gross profit, first of all, you should prepare a trading account. Okay. It talks about the cost of goods sold. Okay. Cost of goods sold means there is a basic formula and it is a logic. We'll do it on the board and see. For the time being, we'll just go have an overview about final accounts, right? So trading account is that. Trading account means cost of goods sold, it deals with. And when it comes to profit and loss account, uh, after preparing trading account, if there is gross profit, it is transferred to the profit and loss account, right? And after certain adjustments or debiting all expenses and crediting all gains, all those things happening, we'll be getting the net profit. Okay. All the indirect expenses are debited here. So we'll also discuss what are direct expense and what are indirect expense. In a nutshell, direct expense means expenses related with the factory. Okay. We'll be talking about power, fuel, electricity charges, wages. Okay. And when it comes to profit and loss account, all the indirect expenses for producing that goods, it may be carriage outwards or insurance, then what, salaries paid, rent, all those things comes under profit and loss account. And after preparing trading account and profit and loss account, mostly you will be getting net profit. Okay. This net profit is taken and added with the capital in balance sheet. What is balance sheet? Balance sheet is not an account, but it shows the financial position, or it is a statement kind of a thing where you will be seeing assets and liabilities. And to cross check whether your answer is right, the balance sheet asset side and liability side should be equal. Fine. So right now we'll be going to learn what do you mean by cost of goods sold, and what do you mean by a trading account, and what are the things involved in trading account. Okay. Then we will discuss about profit and loss account, balance sheet, and we'll be preparing final accounts. Okay. And due to this fundamentals of accounting, in this module, we'll be discussing the final accounts, or we'll be doing the problems with very minimal adjustments like closing stock. There are n number of around 17 to 18 adjustments, kind of problems when it comes to final accounts, that we'll be learning in the second module, okay, of the MGU syllabus. Fine. So we are going to draw a trading account and finding it out. Okay. Thank you. Hello, one and all. So we'll be discussing about trading account in this video. So what is the main objective of trading account? Trading account is prepared to calculate gross profit. Okay. So to calculate gross profit, we are actually using a formula called sales minus cost of goods sold. Okay. Whatever money is getting from the sales will be deducting from the cost of goods sold. So we'll be getting gross profit. Okay. So if we try to define what is cost of goods sold, it is nothing but we'll be preparing a trading account or using this kind of formula. it is ideal to create a trading account to find out cost of goods sold and thereby gross profit. Okay. So when it comes to cost of goods sold, this is the formula. First one, you have to write opening stock. Opening stock means the last month or the last year, whatever the stock may be, we'll be bringing it over here. Okay. So opening stock and purchases this month or this year. Add purchases, and this purchases means purchases minus purchase returns. Okay. Basically net purchases. So opening stock, add net purchases and all direct expense. We have seen what are the direct expense or the expenses related to factory, right? Those expenses are added over here. Then less closing stock. So you will be getting cost of goods sold. Fine. That is known as cost of goods sold. And if we deduct this one from sales, and this sales talks about net sales. What is net sales? What was net purchase? Purchase minus purchase returns. And what is net sales? Net sales means sales minus sales returns. So in order to reduce that confusion, we are actually preparing this one. What is this? Trading account. Okay. So if you take trading account, this is the format for trading account. Trading account for the year ended date. And it is a T format, debit side and credit side. So this is the format of a trading account. Opening stock. Okay. Purchases less purchase return. Purchases less purchase return. We'll be putting it over here. Then direct expense. It may be wages or carriage inwards, power and fuel, electricity, anything it may be related to the production. That we'll be adding over here. And when it comes to the credit side, sales and closing stock are the general items appearing in the trading account. Okay. And if there is any sales returns, you will be reducing the value of sales returns from sales and putting it in the outer column. Last one, closing stock. Okay. And if this side is maximum, we will be we will be balancing this now. So if it is 10,000 and 10,000, here it is 4,000. Gross profit carried down will be 6,000. Okay. This is the trading account. So if you take trading account, opening stock, purchases, direct expense, and credit side, sales and closing stock. Fine. And here gross profit carried down. And if we are getting gross profit carried down, we will be transferring that gross profit to the credit side of profit and loss account. Fine. Thank you. So we had discussed how to prepare trading account. So these are the various direct expenses that can be included in the trading account. See the characteristics of these expenses called direct expense: wages, customs duty, freight or carriage inwards or cartage, royalty paid on production, gas, fuel, packing material, factory expense, etc. These are related to the hardcore production of a product, right? There are two types of carriage. One is carriage inward and another one is carriage outwards. There is only one difference. Carriage inwards means the trucks bringing the trucks bringing in the production requirements, okay, all the raw materials. And carriage outward means those are the products or finished products taken from the factory to the sales point. Fine. So carriage inward is a direct expense and carriage outward is indirect expense. So these are some of the direct expenses which can be included in trading account. Fine. Now moving to profit and loss account. First of all, what we will do after preparing trading account, we will be transferring the gross profit on the credit side of the P&L account. If it is loss, we will bring to the debit side. Fine. And what are the things which can be credited and debited to the profit and loss account? All incomes, okay, all incomes that we receive can be credited to the P&L account. All the indirect expense will be debited. What are the various expenses? Salaries, rent paid, commission paid, advertisement, insurance paid, all other things, right? So these are the things that we are doing. Okay. So the balancing figure will be either net profit or net loss. These two things will be transferred to the capital account in the balance sheet. Okay. Now these are the various indirect expense and indirect income. Depreciation, bad debts, and bad debts and all, we have adjustments that we'll learn. Trade expenses, printing and stationery, manager's commission, again, this is an adjustment. Selling expense and other miscellaneous expenses. And when it comes to indirect income, you'll be seeing dividend income, bad debts recovered, rent received, and all those things. All these items may have adjustments also that we'll be learning, like outstanding or prepaid, all those things. It is very simple that we'll learn. Okay, so we are going to prepare the trading and profit and loss account for this problem. Okay, so you just read out the trial balance, what are the items over there, and we'll be preparing the trading and profit and loss account. Fine. So if you are going to draw the trading and profit and loss account, this is the format: particulars rupees, debit side and credit side. Fine. And moving to the question, what is that? Stock on 1/1/2019, that is opening stock. So just recollect in which place opening stock will come. So it will come on the debit side of trading account, right? Opening stock. What is the price? 2000 rupees, right? 2000. Okay. So opening stock 2000, and next one, purchases and sales. See, in the trial balance, if this thing, what is that 20,000? Is it purchase or sales? 20,000 is purchase, right? So purchase is 20,000, and sales, since it is on the credit side, that comes under this side. Fine. So what is this? Returns. Returns can be purchase return and sales return. Here you have to note a point that purchase return, purchase comes in the debit side. Okay. So purchase returns comes on the credit side. Same, sales comes on the credit side and sales return comes in the debit side. Okay. So in the trading and profit and loss account, the second one is purchase and there is a return. So what is purchase? 20,000. Purchase 20,000 less returns, less purchase returns. Less purchase returns. What is purchase returns over here? Credit side, right? Minus 1000. That is 19,000. What are the other items included in the debit side of trading account? Direct expenses, right? So if you are seeing here, carriage and cartage, those two are direct expense. If nothing is provided, carriage inwards or carriage outwards, it is not provided, and only carriage is provided, that is considered to be carriage inwards, and that is that comes in the debit side of trading account. Okay. Carriage, how much? 1000. Cartage, 1000. Is there any other items will be coming over here? Rent, it is indirect expense. Interest received, indirect income. Salaries, indirect expense. General expense, discount, insurance, all these are indirect income or expense. So nothing comes here. Okay. Now coming to the credit side of trading account. Recollect the format. What was here? Sales less sales returns. Okay. What is the sales amount here? Sales on the credit side, it is 30,000 rupees, right? So sales 30,000 rupees less returns. What is the returns? And the returns is on the debit side, 2000. Sales returns will be on the debit side and purchase returns will be on the credit side. So minus 2000. That is 28,000. And one more thing will be added over here in the trading account. What is that? Closing stock, right? Closing stock. This is closing stock. Stock on 31/3/2020, and that is closing stock. It is rupees 5,000. Closing stock 5,000. Okay. There are no more entries will be coming in the trading account, so we can balance this to check whether it is gross profit or gross loss. Okay. So which side is maximum? This side, right? Credit side. That means 28 plus 5, 33,000. Okay. And if you are balancing this, gross profit carried down. Gross profit carried down. So 33 minus 10, 33 minus 2000, 31,000, 31,000 and 31 minus 2, 29, 29 minus 19, that is what? 10,000, right? Gross profit is equal to 10,000. Okay, so gross profit we have carried down as 10,000 rupees. So trading account is over as of now. And now come to profit and loss account. When you take profit and loss account, the first process you have to do is gross profit should be transferred over here. Gross profit brought down, that is 10,000. Okay. Then you see what are the indirect income and indirect expenses pertaining to this problem. So come over here. Rent. What is this rent? Rent on the debit side it is 1,000. So that is an expense, right? So you have to write rent 1,000. Okay. What is the next one? Interest received. Interest received is an income, that's why it came in the credit side. So we have to bring it over here. Interest received. What is the amount? 2,000. Then salaries rupees 1,000. Right. Salaries rupees 2,000. Salaries rupees 2,000. General expense rupees 1,000. That is also an expense. And why discount came on the credit side? That talks about discount received, which is an income. So it will come this side. Okay. What is that? Discount. That is 500. 500. Okay. And insurance debit side, that is an expense. It will come on the debit side of P&L account. Insurance. What is the amount? 500. So all the items are over. Now we will be balancing this. Which side is more? Credit side is more, right? So we will be writing, we will be totaling this. 10 plus 2 plus 5, 12,500. 12,500. Now, if we are getting balance carried down here, it means net profit. Okay. If balance carried down comes here, it is net loss. And if it comes here, it is net profit. So, net profit transferred to capital account. So, this net profit is going to be taken to the balance sheet and it is added to the capital on the liability side. Okay. So, what is the net profit? 12,500 minus 500, 12,000, 11,000, 10, 9, 8. So, 8,000. 8,000 is the net profit. Okay. So, we have tried to prepare trading and profit and loss account. And in trading account, mostly opening stock, purchase, direct expense on the debit side, and sales and closing stock will be coming on the credit side. Fine. And when you take the question over here, if the question comes like this, purchase and sales, purchase is debit and sales is credit, purchase returns is credit and sales returns is debit. And we will be using the credit side of profit and loss account to add all the indirect income. Okay, indirect income. And on the debit side of P&L account, we will be using it to add all the indirect expenses. Fine. So first we will be getting gross profit from the trading account. It is transferred to profit and loss account. And at last, if the balance carried down comes over here, it is net profit, and this is transferred to the liability side of the balance sheet and in the capital account of the balance sheet. Fine. Thank you.